integrated with our colleagues in Chicago. So it's fiduciant advisors.
Fiducian?
Fiduciant advisors, yeah. And you're going to say where that word comes from. It's actually a word we trademarked and made up. It didn't exist before we renamed ourselves. So we did.
Like Verizon.
And there you go. Exactly. So we did indeed rebrand, but no changes to personnel or team or approach or anything whatsoever.
Meeting's called to order. My name is Jeffrey Caddison. I'm the chairperson for the Risk Management Advisory Board in the town of West Hartford. Today's November 8th, 2021. We have a meeting that we will be starting, but we do not have a quorum at this point. We have 6 members, a 6-member committee. There are 2 vacancies. Anybody who's watching this, if they're interested in joining a committee, we are looking for 2 additional members. We would need to have 4 here to have a quorum, and there are 2 present right now. Kathy, you might as well mention you're here, and we'll go around and mention everybody who's on the call.
Yes. Kathy Gobes, also risk management member.
John?
John Stewart. I work for the town of West Hartford as a risk and safety analyst in the risk management department.
And you are?
I am sitting in today for the town manager who's out on medical leave. I'm not a formal member of the committee, but I am sitting in for her.
Okay. We cannot vote on anything since we do not have a quorum at this point. Item number 1 on the list are the investment returns of various funds that the town maintains. Chris Katchmer from Fiduciant Advisors, a new word for the dictionary, will be presenting investment results.
Great. Thank you, Mr. Chairman. Good evening, everyone. Great to see folks. Everyone has access to the report that Lisa sent around, the first quarter report, and we'll use that as a reference if we could. And I promise we won't go through each and every page, certainly, but we'll hit the highlights. So if you could jump ahead with me, and I'll kind of let folks catch up here, all the way to slide 5. You should see in the upper left-hand corner the reference to market themes. Everyone see that okay?
I don't think I have the handout.
We got them from
I think Lisa had sent them out when, Lisa? Earlier today?
Yeah.
I think on Friday.
Oh, on Friday?
Yep. I can send them again.
November 5th.
I'll send it again.
So it should, Jeffrey, be on the way momentarily here. Give Lisa a second to send it.
They also, Jeff, they also came October 29th, I think, is when Lisa sent all of the.
Yeah, I pulled off all of the information she sent that day, but that wasn't part of the package that I got.
It was not done then. It wasn't done by then.
Right. So then there's one on November 5th.
I will forward it. Just have to find it.
I got it.
You got it?
I can send it.
Okay, perfect. Thank you.
I'll give Kathy just a second to send it over, and then we can start to backfill some of the content here.
Should be on its way.
I got one from you. Oh, that was 5 minutes ago. Okay.
Yeah,
That's
you
what
should get one any moment from me.
Yep.
Okay, and what page did you say, Chris?
I am going to move Kathy to slide number 5. The page numbers are in the lower right-hand corner, if you can make them out. And you'll see it's labeled market themes in the upper left-hand corner of the page.
Got it.
And I will defer to the chair and proceed ahead here. Or are we going to wait a minute more?
I do not have it yet, so perhaps he should just start.
All right, I will, I think it'll be apparent as we work through this. So as mentioned, right, we started off the year, and much of the year, I think, as you all know, has been pretty constructive in what we call the risk markets, right? And that's predominantly equities, but by extension, some other areas as well, and not quite as productive for fixed income investing, really because there's been a headwind in the form of what has been, by and large, higher interest rates since the beginning of the year. But anyways, you mix that all together, and we had what on balance was a pretty constructive year in the markets. We've certainly come more recently. September is the most current example of a little bit more in the way of challenging conditions in the market, and the landscape is a little bit in flux, if you will. And that flux is the byproduct of a couple of things. One is, I think, as you all know and have read, right, the Fed continues to evolve a message, and that message on balance is calling for removing all of that stimulus that they had put into the system at the onset of the pandemic. And they have started to message that both in the form of beginning to reduce their monthly purchases of Treasury and mortgage-backed securities. And then sometime later in the year, there's certainly a likelihood, and the market is handicapping the beginning of an interest rate hike cycle. And you see the visual actually on that same page 5 in the upper right-hand corner, where we highlight for you the now infamous dot plot, which shows the Fed Open Market Committee's kind of forecast of rates in their poll of the governors. And the takeaway really there is that there is every expectation from those members who vote on those actions, in addition to the investing public, that interest rates will begin to move higher in the back half of 2022. The policy gridlock in Washington was solved somewhat, I suppose, on Friday with the passage of the infrastructure deal, and we know there's more work underway there. And then finally, of course, unfortunately, we've got some of these lingering challenges associated with the Delta variant. So the landscape has been a little bit more tepid, if you will, right, than it had been prior to, for sure, in these last few months. And as we'll see momentarily, that has given investors a little bit in the way of pause. At least it did in September. October's been a bit of a stabilizing month, actually. I mentioned it in kind of in our informal conversations before we formally convened, but you see on this same page in the lower left-hand corner of page 5, the other thing that's out there, right, that's garnered some press and attention for sure, but maybe not as much as deserved. And that, again, is we are kind of at a period of historic consumer financial health. So if you can make it out there in the graphic, you see that household net worth, that light blue line, it continued since the beginning of the pandemic to spike up fairly sharply as things begin to stabilize in the markets anyways and recover. And moreover, we've got that associated with very low indebtedness. So the consumer is in pretty good shape financially. And once these hopefully supply chain gridlock begins to work its way through the system, consumers have been pretty readily apparent in terms of their desire to spend and consume, in fact. And as we all know, that's 70% of GDP. So that's could be an important tailwind to bridge us through some of these frictions we've got with supply chains and somewhat higher inflation and the like nearer term. So that's the backdrop in the markets broadly. I won't go in great detail. On page 6, you see some more macroeconomic data. The upper left-hand corner exhibit shows you real GDP and a year-over-year expectations, and certainly the world. If you see the highlighted box to the right in that exhibit, there continues to be expectations for global growth, certainly through the balance of this year and into 2022. I think I read this morning the World Bank, I think their estimate for global growth in 2022 is just under 5%, I think 4.8%. So fairly decent. But we do have, right, as mentioned, near term, some of these issues with supply chains and inflation. You see in the lower left-hand corner of the same page those bump ups in both headline and core inflation associated with some of those supply chain disruptions and the like. And we do think inflation does stay a touch higher here over the course of the next several months, but that as the economy recalibrates and some of these things alleviate, we do expect it to come back down to a more manageable level, and ultimately a level that wouldn't serve to derail, the back half of this economic recovery. If you look at, we don't show it on the page here, but if you look at things like 10-year break-even rates, which are proxies for what the markets think inflation will be over the next 10 years, that's hovering at about 2.5%, 2.6% today. So that not all that north of those longer run rates that we've seen of 2% and 2.25%. So that's the backdrop economically. Let me just share with you a couple of data points on returns, and then we'll pause for a question or two before we move into the portfolio details. If you scroll ahead to page 7, you'll see an exhibit that portrays asset class returns really across the entire investing spectrum. The left-hand side of the exhibit on the top half of the page you see there is labeled our fixed income returns. And those fixed income returns for the quarter, as you can see, in terms of the encircled numbers, were pretty darn modest, right, in Q3. Look at the U.S. core bonds, the third data point from the left, and you see that bonds were just up a touch, 0.1% in the quarter, and actually are down 1.6% year to date through September. Again, a byproduct of those higher interest rates. And there's been small pockets of incremental return opportunity in fixed income, high yield, and tips offer up a little bit of that. But really, the takeaway there, right, is we've had a very modest environment for fixed income returns. When you switch gear to equities, in the middle of that same page, you'll see there, starting with U.S. large cap through to emerging markets, the global equity markets. And year to date, again, a mixed bag, right, in terms of the quarter. U.S. large cap stocks held up marginally, but the rest of the world and the opportunity set, if you will, did not. But the year-to-date numbers, emerging markets aside, actually, through September, have been pretty solid, all things considered. And then the so-labeled reopening or reinflation areas of the markets, commodities, REITs, real assets, and the like, as you might expect, given some of those metrics we just talked about in the inflation environment, have done pretty well year-to-date to the far right. So really, all things considered, we are cautiously optimistic on the economy and its ability to kind of navigate what we think will be some challenges over the next couple of quarters. Again, predominantly associated with the supply chain challenges, but that the undercurrent, whether it's corporate financial health, consumer financial health, just economic data, kind of printing pretty constructively when we have some of the tensions alleviate around the healthcare crisis. We think that we've got the makings for more economic growth and, the possibility being meaningful for decent capital market returns over the next several quarters. Fixed income certainly continues to be a challenge, right, just given how low base treasury rates are. So the returns there, if they do come, we expect will be pretty darn modest. So let me, Mr. Chairman, pause there for a minute, see if folks have any questions on the broader economy or just general market returns before we segue into the portfolio itself.
Kathy,
None for me.
I notice you don't have crypto on here, thank God.
Oh, it's a great question, Mr. Chairman. It's certainly something we spent a lot of time on, and it's, we're still waiting for that market to institutionalize a bit more. As you all know, the patterns of price discovery there and the volatility and some of the mechanics and logistics of owning it are still come with some friction. I suppose at some point, though, right, that market does become institutionalized to an extent that you'll start to see institutional investors like yourselves start to dip your toe into that market. So far, there's been some, but fairly scant activity on the institutional side of the ledger for those type of assets. But certainly something we're monitoring and we'll keep you posted on.
When we look at this chart, it's clearly year to date, quarter to date. If we think about the future rather than the past, do you think that this chart is reasonably predictive of where the future will be as well, or do you expect changes there?
Yeah, so it's a great question. One of the things we'll do for you in our next quarterly report, you'll remember, is the season where we dust off and retest our capital market inputs and our assumptions, and we'll actually model the portfolio explicitly and give you those guideposts about the return potential for your allocation at our next meeting. The short answer is, the preview answer is, equities probably on a global scale over the next 10 years or so probably come out at like something like 6.5% per annum return, and fixed income, when you've got base treasury rates at 1.5%, right, are going to be pretty modest. This is off the top of my head, so don't hold me to it, but probably expected returns over that longer haul of 2, maybe 2.25%, something like that. So we do think the landscape broadly for capital market returns is it's a little bit mitigated, right? Because we are coming from kind of elevated valuations, and we're coming from, despite the pandemic, right, what has been a fairly strong period of capital market returns. So that all factors into it, but we will have those actual, particular numbers for you at our next meeting.
So real returns on the debt side, the bond side, could continue to be negative for some time period in the future.
That's fair. That's absolutely a possibility for sure. You're right. Anything, there's a lot more detail here in the immediately subsequent pages to 7. I think, if no one objects, in the interest of time, I'm going to jump all the way to page 13. And on 13, when you get there, you'll see the allocation of the fund at the end of September. And you'll make out, as you can see there, about $27.9 million of invested assets. Relatively close to target allocations. You'll remember in the past with this group, and if there's no specific objections here, what we will do with Lisa and with Peter is we'll work with them to resquare the portfolio short term right back to those target weights. No surprise, right, that by virtue of what equity returns have been versus fixed income, that the portfolio's a touch overweight equity, particularly domestic equity. So we'll look to bring those back into those target allocations per the IPS near term here. But nothing untoward on the allocation front. The only other topic of interest from our standpoint for the committee this evening, if you work your way down that exhibit, you'll see at the very bottom of the page, the Harvard Diversified International All-Cap Strategy, which is one of your 2 dedicated international equity managers. We did recently elevate that strategy to watch status. There were a couple of portfolio managers that departed from the operation. They have been backfilled with some experienced people, but our analysts continue to do that monitoring in the work. So just as a matter of protocol, you'll see in the reporting materials that we do have that strategy on that elevated watch status. We'll certainly keep you posted along the way here as developments ensue, but no action items immediately necessary or need contemplation by the committee. And if we switch gears to performance on the very next page, on page 14, you will see there, excuse me, in the middle of the page, is the trailing, in the form of the trailing performance summary, what's going on more recently. So kind of as advertised and previewed, right? The third quarter was fairly nondescript in terms of return potential. The portfolio was a touch ahead of the blended benchmark for what it's worth, but still down a touch. You see calendar year to date through September, up a little north of 5%, a 1-year return through September of about 14.5%. And then you see subsequent returns, annualized returns over longer time frames. And kind of consistently accruing north of the benchmark, right, which is the goal and objective, of course. So I think from an allocation and a manager roster standpoint, we're in pretty good working order. Performance is kind of following suit. And I think, Mr. Chairman, with that, again, I'll pause and see what questions the group may have on either the allocation of the performance or the manager fronts for that matter.
Kathy, you and I are the group. Do you have any questions?
Well, I just was wondering, how long do you keep them on elevated watch?
That's a great question, Kathy. So typically our rule of thumb is 3 quarters. So put them on watch in the second quarter.
So you did put them on watch in the second quarter, so
Yeah.
they've got another one to go.
Yeah, exactly.
And so far their results have been holding, you're saying?
Yep, the results haven't been problematic, right? So it's really the people keeping tabs on just manager changes. But it's a great question, and our research analysts, it's a 3-quarter rule generally. Sometimes there can be extenuating circumstances, but I think in this case, they'll follow that 3-quarter rule.
Gotcha, thanks.
Is there any reason also to revisit the allocation, the targets?
Well, we'll do a little bit of that, right? We'll do that formally in our next meeting when we've got the latest capital market inputs. Remember, one of the things we've talked about in the past, right? Just as maybe a collective reminder for us, we're beholden to the state statutes that kind of govern how we're able to invest, and they call for if you have a committee, if you have an investment policy statement, if you're doing regular asset allocation work, you folks, of course, can check off yay on all 3 of those fronts, then you can be up to 50% in equities. But if you're taking that full bite out of the apple at 50% equities, then your fixed income, as you've got it construed today, is confined generally to government and agency securities, basically, which with Longfellow in your tips assignment you're doing. So that's kind of our larger strategic barometer and what we're beholden to. So we'll show you what that 50-50 mix looks like, and we'll offer up some alternatives again in our next meeting. But I would say, Mr. Chairman, the short answer is we don't see the need to make any changes just yet.
Several years ago, I remember we moved the allocation a little bit from US to international.
Correct. That's right.
And I don't need a long answer, Chris, but I found page 11 interesting. Partly it's just a nice pictogram in terms of showing that the colors pop all over the page, right?
Oh, that is, Kathy, the infamous periodic table, right, is what it looks like. And it does show it's interesting, right? One of the things that it speaks to, right, the disciplines of diversification, I suppose. If you can make it out there, you see, I guess it's a mustardy color, a balanced portfolio, right?
Sits in the middle, kind of, yeah.
It never really gets you in a ton of trouble, right? So,
right.
One of the motivations there, and of course, your portfolio, I think, broadly would fit the definition of balanced, and that certainly is a secondary objective, right? To try to keep you away from trying to guess. The famous example of that, right, is emerging markets. Look at emerging markets in 2017.
Right.
37%, where emerging markets in 2018, bottom of the roll. There's obviously asset classes that are a little bit more disposed to volatility than others, but you get the point.
Mike, that was going to be so I thought the graph was kind of interesting and obviously speaks to keeping balance, but how, with the allocation that we have, I don't know if you have a measurement of balance. Do you say, oh, this is X% balanced, or how do you think about that?
Yeah, there's probably not a hard and fast rule. I should know I'm pretty certain in this exhibit, Kathy, that this is a 60% equity, global equity, and 40% US fixed income mixed is the definition of balanced here. So you're a little bit more conservative than that, right? Because you've got 50-50 equity and fixed. So I think what that does, right, if you were to kind of trace here, and this isn't a perfect example, but you're kind of trailing, right? You're kind of following that balanced mix of mustard, if you will, colors there. In down years, you're probably, in more challenging years, you're probably protecting a little bit better. For example, 2015 and 18. In stronger years for that mix, say 2013, you're probably just a touch behind it, if that makes sense, right?
Sure.
But you're pretty close to paralleling that by virtue of your mix. And I would argue that a 50-50, does represent the spirit of a balanced portfolio.
Okay, thanks.
It is interesting to see this chart, and the two high variance ones are the commodities and the emerging markets. The commodities, it's either you strike out a lot and an occasional home run and not much else.
Yeah, and it's been, as you know, right, it's been certainly a tough decade for commodities, all things considered. I guess year to date aside, of course, like you say, they've had, a couple of decent years, but commodities, as you all know, were in quite a rut for an extended period of time. So you're spot on with your observation. Certainly statistically, when you look at both emerging markets and commodities, they tend to be the more volatile of the asset classes, for certain.
Thanks.
Thank you.
Okay, great. Anything, I did not have any other prepared remarks, so I am happy to cede the floor to the rest of your agenda and do it the direction, Mr. Chairman. I can leave or I can stay and listen quietly.
I see Ian just signed on. He's an investment guy, but I'm not sure if he would have any observations at not having seen the presentation.
Let's give him a minute in case he looked through it ahead of time. I know he likes to.
Good afternoon,
Hi,
Ian.
everybody.
How are you?
Good. How you guys doing?
Good. Chris
I thought it
Ketchmer
was
is
6
just
o'clock.
going through his presentation on, I don't know if you had a chance to look at the slides that were sent out before.
I looked at some of them. Let me just check. I'm sorry. I thought it was 6 o'clock. It's I didn't know it was 5:30. My apologies.
We've been bouncing around. We started at 5 this time.
Okay.
I think daylight savings time messed us up.
Well, I thought last time, I
Oh,
thought
there it is. That's what it was. Thank you.
I thought we were starting at 6 last time, and then when I tried to get on at 6, everybody was done. I was like, oh, missed it. So
Okay. So I'm sorry. Where are we at? Where do we?
Going through the slides, Chris made a presentation, talked about the economy, the Fed getting ready to taper and perhaps probably raise interest rates, performance of the bond and stock markets, how they fared.
Lisa sent it out on October 29th.
Okay. Okay. Yeah. I'm pretty familiar with all that, so that's fine. And I did read the slides actually. So that's good.
So we
Yeah.
just,
Yeah. I did go through the whole.
when we saw you
yeah.
coming on, we asked Chris to wait for a minute at least to see if you had any questions for him.
Okay. No, actually, I looked at it. I had some nitty-gritty stuff, but nothing important.
Okay.
With that
Yeah,
said,
great.
Chris, we thank you for coming. Someday soon, maybe in person.
Absolutely. Great seeing everyone, and be well, and we'll chat soon.
Thanks,
Good. Well,
Chris.
thank you again, Chris.
All right, thank you. Bye-bye.
Bye-bye. And now we get on to other issues which may be a little tricky. Number 2, annual health benefits report. Rick was going to present that, but Rick is not with us tonight. He had to go to a funeral, unfortunately. So we will defer on that issue until the next meeting. Item number 3, updated insurance schedule. We talked about that briefly last time we met. I don't know if everybody remembers that discussion, is familiar with it, any other items to discuss about it. It's the property casualty side. So I think I might be the only one with a lot of property casualty background. And I'm all set on this. Any questions?
None for me.
Yeah,
Item number
I-
4 is the
What-
2022 annual agenda and meeting dates. We're supposed to vote on it, but we do not have a quorum at this point. So basically, just to run through the dates, there are 4 meetings scheduled in 2022, January 10th, May 9th, September 12th, and November 14th. January 10th, for those on TV who cannot see this, there will be an election of the Risk Management Advisory Board Chairman and Secretary, review the risk management program and our role on investment results, quarterly health benefit status. There will be 3 items. May 9th, Risk Management Fund proposed budget, investment results, quarterly health benefits status, and Risk Management Fund adopted budget. September 12th, investment results, annual health benefit report, updated insurance schedule, and the 2022 annual agenda and meeting dates. I think that should probably be 2023. November 14th will be investment results, quarterly health benefit status, risk management fund results, retiree health valuation, 2023 appointment, reappointment status, operating procedures and objectives. That's the schedule, but we will have to defer a vote on that until we have a quorum. Next item on the agenda are the retiree health evaluations. John, is that also a Rick item?
I believe that would be a Rick item as well, yes.
So we'll have to defer on that as well. 2022 RMAB, Risk Management Advisory Board appointment, reappointment status. I'm not sure if we have anybody on who can talk to that. I know I don't know the status of that. I suspect that was another Rick item. And Lisa.
Yes, I think you're correct.
So we'll defer on that item. Item number 7, Risk Management Advisory Board operating procedures. Did the members of the committee, the board, review the procedures? This will need to be addressed, I believe. Unfortunately, Rick is not here, but item number 2 of the procedures is the board shall hold a minimum of 6 regular meetings in each calendar year. And I don't think we've been there since COVID started, and there are not 6 scheduled for next year at this point. So this is something that I think needs to be addressed, and I am not sure who addresses it. I suspect Rick would be the person who could opine on that.
Rick and Lisa Michaud.
So we will defer on that item as well.
But maybe even if we're deferring, maybe we can make a recommendation on that. I mean, do we think 6 is appropriate? Is it?
I
we
sort
need
of,
6?
I'm of the belief that 6 is too much. I don't think we really get that much accomplished that 6 times a year. 4 seems more appropriate at this point.
Yeah, I agree with that. It seems like the only reason for 6 is so that if you have to cancel one, you can still have the others. But I feel like it's more appropriate to set it up for 4 and put a lot of emphasis on getting those 4, moving the dates if people aren't going to be available, rather than scheduling and canceling. And then
And
So
of
maybe we
course,
can
it's
make a
always a little less risky to get the quorum if we have all 6 members of the committee appointed. Right now, we're down 2.
yeah, that's another question, is whether, when it says the quorum shall consist of 50% plus 1, right, of the voting members of the board for regular, and so is voting members of the board, and I understand the interpretation would be that there's 6 positions and that they are the 6 voting positions. But if they're not full, and we have only 4, it makes it super challenging then, right, to have a quorum.
We need 100% attendance at this
Yeah.
point.
Right. So,
And I'm not sure if I would agree with the interpretation that since there's only 4 members, 3 constitutes a quorum.
I wasn't saying that I agree. I think the way it's written, a voting member is a member, is each one of those 6 positions would constitute a voting member. The question is, do you have 6 voting members when you only have 4 positions filled?
Why don't we use this opportunity to change that language and just call it of the active or of the filled positions, or whatever language you want to use?
So that might be another recommendation to them, is to, because otherwise as a team, it makes it really difficult to move forward.
Right.
Shall
Well,
we
we
make that
can't
a-
vote on
make
anything.
that
I
a
think it's worth
recommendation?
mentioning to Lisa and Rick that there's 2 areas of the procedures that are worthy of review and hopefully change.
Okay, I will make sure they're aware of it.
Great.
And then the other issue that I don't know if it's worthy of discussion is 4A. A member shall not serve more than 3 consecutive one-year terms as chair unless reelected by 2/3 of the board. And there should be one about the duration of membership period, and that's the one that's really of interest to me, because with the difficulty of adding members and the limited duration of our serving on the board, maybe the duration could be lengthened. I think there's several members who were here who hit their limits who might have wanted to stay on, and their input right now will probably be welcome.
Yeah,
Something
this only applies, 4A only applies for the chair, right? You
Right.
you can stay on as a member. You just can't be a chair for more than 3 consecutive terms?
Well, Rick Roberts, who was chair, had hit a time limit as well, not only for the chairmanship, but also for membership. So it's the second piece that's of greater interest.
Okay, let me just,
I don't see where it is on here.
yeah, where is that?
I don't see it on here either, but I believe it certainly exists.
Yes, I agree that it was, I think it's that you can have 2 consecutive 2-year assignments. But after that, you're done, but I don't see it in here.
I believe there is something that states the terms, though. It's something to ask about. John, can you help us on that one as well?
Yeah, I will touch base with them on that to see, where that exists and get that clarified.
I might be able to pull up an old one.
Yeah, it's I think that the operating procedures could use a few changes. On to the last item, the objectives, item number 8.
Oh, okay, we're done with the procedures?
Are there any other observations on procedures? Any other discussion items?
No, just what are so what's the next step here? It goes back to Rick that makes some changes and then we vote on it? Is that how it works?
This is a discussion item for us, and I think what's worthy here is to make some recommendations to Lisa and Rick. And I think they're on board with some of these items already, regarding the number of meetings per year, certainly, and then something to do with getting more membership on the committee. So,
I just pulled up one of the previous listings of the members, and it's 2 3-year terms. So
okay,
it must be listed somewhere else in the charter of the Risk Management Advisory Board, that it's 2 3-year terms.
Okay, that's the max anybody can be on the board?
That's my understanding. It's 2 consecutive 3-year terms.
and given the difficulty of getting new members, I don't think it's inappropriate to say offer a third if someone is so interested. And maybe it's contingent upon whether there's an opening or not.
Yeah, something like that would make sense.
Yeah. Although, I mean, in 4A right now, there is already that kind of, it already says unless reelected by 2/3 of the members.
But that's for the chair, right?
The chair,
Yes.
right. So, I mean, there is a
But that's because it's for single years. So in theory, you could be on the board for 6 years under the current rules, and you could be chair for 3 in a row, but not more than that unless the voting that's described here, right?
Yeah, 2/3, right.
So say you had someone elected in their 3rd year of their first term, they could also serve their 6th year if the board, 2/3 of the members of the board agreed.
The whole concept of membership, I think, could use a revisit. Any other thoughts on the operating procedures?
No, but maybe to that point though, I don't know what the pipeline is for finding people and whether it's something that this board could review a little bit of how to identify people that would be eligible to be on the board. I don't.
But one of the things that I think becomes an obstacle are the need to have members coming from both the city side and the Board of Ed and from both political parties. And I don't know if that becomes a constraint here as well.
So I guess my recommendation, not to put into here, but is that at our next meeting, it might be worth just having a conversation about the pipeline that's used to fill them. And to your point, maybe there are too many constraints. Like, what's the overall goal here? Is it to have enough people with financial experience so that you can review and give comments? Is it, whatever. So like you said, maybe it's freeing up some of those constraints. Maybe it's just seeing what the pipeline process is and whether people that are, I'm not sure where I would look to try to find somebody, but is there more we could do to try to replace ourselves or help them find people? I don't know.
Can I
I
just
think
address-
to begin with, there's probably a need to advertise that the committee exists.
Mhm.
I'm not sure how proactive or reactive both sides are. How proactive is the town in looking for people? How many people in town are aware of this and might have interest if they were aware of it?
Right. Lisa, you were going to throw something in?
I was just gonna chime in that there is a section in the town code, it's 18-18. It's regarding the risk management program and the advisory board. And it does give some information about, even history about the number of people on it, what type of people we're looking for. So it might be helpful just to take a peek
I
at
believe
that.
we're supposed to have 2 investment people.
There
plus
should be 2
two-
investment people that have municipal experience.
Plus
Yeah,
2
have
life
it.
or pension people, plus 2 property casualty.
It doesn't say anything about that in this. I can forward it to you.
Yeah, I think we got it. Probably.
You did?
Well,
Okay.
no, ages ago. I'm looking up my old stuff. I think we may have gotten it. You're sending it to us, Lisa?
Yes, just renaming it.
But anyway, I think the real takeaway is we would need Lisa and Rick's input on how they think about that and recruit for whatever is described there, whatever the constraints are. It seems like it's a bigger issue to have a lack of filled positions than to meet all the constraints, but we should talk about it with them and see.
I don't remember when we last had all 6 positions filled. It's been quite a while.
I don't think since I joined, we'd had all 6.
I thought you might have been number 6 at one point.
No, I replaced someone, but when I came on, well, there were people that I never met. Let's put it that way.
You were coming in the revolving doors, they were going out. So for a short period of time, there were 6.
Maybe, or maybe there were people that were named, but they weren't attending the meetings, so. Okay,
John and I can talk to Rick and Lisa about all of these items you guys just listed, and we can get back to you this week.
okay.
Sounds good.
And again, I think it probably could be a discussion at a next meeting.
I can tell you that, so I've been in the town for 26 years, and I was on the Risk Management Advisory Committee, I don't know, maybe 20 years ago. And then I went to the Board of Ed for a few years, and now I've come back. It's always been a problem finding people, always. So
And I think the other interesting issue is, do we help the town in making decisions, in considering alternatives, whatever it may be? Does the 20
Is it
years ago, I
useful?
suspect that the town had a lot of benefit from this committee as the town was migrating to self-insurance and changing the way a lot of things were done. Today, I think there's a comfort level in place. I'm not sure when we make recommendations, how much substance there is to them, how much effect they have on the town.
Well, I'd like to think, I can't speak for all the programs, but that hopefully this committee over time has helped establish a good program that doesn't need to be as many changes, over the years, because once you have something solid in place, and we're doing more of a reviewing rather than building it all from scratch like they might have had to do it 20 years ago when they might not have had a strong
Exactly.
program.
Yeah,
So
I agree
I
with
think
you.
that's a good thing that there isn't, but I'd like to think that if we really found something that really needed to be changed, that, hopefully the town would listen. It's just that it seems to me anyways, that everything that we're discussing has been pretty well run from what I
Yes.
can tell, or at least where I have the expertise. I think it's been pretty well run, so we don't have to come up with drastic recommendations. Maybe that's the case.
Yeah, and I think it's just because it's running on the rails doesn't mean it's a bad thing to have some engagement and external view, just to say, yeah, these are still where I see the rails, because
Exactly.
together people from different disciplines and perspectives just can also help you make sure you're not missing a turn in the rails or whatever. So
Right.
I don't think, but I think it's worth asking those questions every once in a while. Is the town finding this useful? And if so, can we find a better way of keeping the positions filled so that it works more smoothly?
From my perspective, being on the property casualty side, I think that that's the area in comparison to health, life, and pension where there's more change on a yearly basis. Granted, the investment side changed an awful lot from year to year. Property casualty markets change a lot. The availability of excess insurance changes, prices go up and down. And there's a constant need, I think, to reassess the coverages that you're purchasing. And does it make sense to change a deductible or self-insured retention? Or this year, the big issues are coverage for cyber. Can the committee help in ways in that area? I think we're the only group that the town employees see where we are completely independent. So we bring independence if nothing else.
If not voting, at least some ideas.
Yes.
All right.
But yeah, we should, I think, have somebody make some efforts to make sure that we can actually vote. If we don't have enough people on here and we go through these meetings without a vote, then it's not quite as effective as if we,
Absolutely.
now hopefully we can get enough people to finish that last step of the process.
Right.
And the challenge to have a quorum is a lot easier when you've got all 6 appointed.
Right, exactly. Yep.
Maybe there just needs to be some protection, like if not filled in X amount of time, then can be filled by, like, I don't know which criteria are running them into trouble. But if a position can't be filled within X amount of time, then it can be filled with someone that at least meets 2 out of the 3 criteria, whatever, something that might loosen the restrictions a little bit, and just try that.
Absolutely.
Yep. Yep.
We're going to the board objectives.
Yep.
Should we go through one by one? There's 7 objectives. Number 1, the Risk Management Advisory Board provides an objective opinion as to the adequacy of the town's risk mitigation and investment management activities. I think that's still quite pertinent. Any thoughts?
Yep.
Yep, that's fine.
Number 2, the board is responsible for advising the town council and the Board of Education on matters related to the risk management program and meeting with the town and school system administration on such matters pertaining to risk management as may affect public policy. I don't know how many years I've been on, but I've never been engaged on anything like that. We have advised the town council, I guess, on one occasion several years ago regarding the allocation of investments, where there was a small shift from U.S. equities to international. But that's not something that we really do with any great frequency.
And it's also not public policy.
That's true. But it is advising, I assume it went to the town council for their consideration.
Mhm. It might be helpful to get some examples of this from the past to see if this should still be in here.
Lisa, can you think of anything on that?
I really can't, but I think examples of the past sounds like a great idea.
I suspect that this was a major issue 20 years ago.
Well, it's the kind of thing you could imagine, thinking about COVID, that there's been a bunch of things that are public policy, but we're not involved in that kind of decision. So I'm not sure what's imagined here with the kinds of things we look at. I suppose something like changing the benefit structure on the health and pension side, maybe, but I don't know. It would be useful to know what's been considered fits into this category in the past. So,
And how this committee fits into that whole issue. I think there's a lot of changes to public policy, but I suspect the town makes a lot of those changes by themselves.
yeah. Right.
Number 3, board is also responsible for reviewing the performance of the invested assets in the town's health reserve fund and the town's other post-employment benefits trust with the purpose of ensuring A, that an appropriate equity versus fixed income allocation strategy is implemented and in alignment with municipal guidelines. B, investment management fees are appropriately managed to reduce total costs incurred. And C, funds performance is representative of portfolios utilizing similar investment strategies. I think we just went through much of that with Chris. The one exception being we don't talk about the investment management fees. Other than that, I think that's a regularly scheduled item.
I think we have reviewed I think he has reviewed what the fees are, but he does it like once a year. It's not in every quarter, I think.
Ian, any thoughts?
Yeah, I think, and I didn't really, don't remember really seeing a good breakout of all the fees involved. The investment management fees, I just happen to know those firms that we use and what they charge, so I know they're reasonable. I don't know what are they called now?
Fiduciant.
Fiducian.
Huh?
Fiduciant.
Fiducian, right. I don't know what fiducian charges. Last I think I asked I seem to remember that it was a $25,000 flat fee.
It still is.
It still is for all the programs that they monitor, right? Not just the investments, but also all the other things. So that seemed reasonable to me. I mean, I wasn't here when we did an RFP or anything on it. But knowing kind of the industry and kind of how much is involved with that whole thing, that seemed reasonable. The investment companies that we use and the funds that we use are reasonable because I am familiar with them. So
There is on page 30 of Chris's exhibit, the estimated fees by manager. So he does list it in there. Maybe he just doesn't speak to it each time.
yeah, and that's typical in the industry that you know, a lot of them, they have to list it, but they don't really like to talk about it. But I did look at it. Let me just take a look at that specific page.
Any other thoughts on number 3?
He's taking a look at that page.
Wow.
But it seems like those categories are appropriate.
Yeah, yeah. From what I can tell from the investment side, when I looked at it, it was reasonable. I don't have it in front of me right now. But you know, it doesn't hurt for them to talk about it quarterly, right? I mean, let's make it explicit in his presentation if we can ask them to do that.
Yep.
On to
Yeah,
number
I think
4.
that's a good suggestion to have, that they
Yeah.
can, on a quarterly basis, just explicitly cover it for us. That's a reasonable request.
Number 4, the board reviews and provides recommendations to the town council and board of education for the following critical items. A, recommended risk management budget. B, quarterly health benefit status. C, property and casualty renewal results. D, risk management fund results. And E, annual health benefits report. Thoughts? I'm not sure if we really provide recommendations.
I think we review and provide recommendations if we think something is necessary, right? I don't think the expectation is that we provide a recommendation every time. It's that we are reviewing, and if something seems off kilter, that we would make a recommendation.
So the recommendation could be that the current structure appears appropriate.
Right.
Yeah, maybe we can make that a little more explicit than in, you know, kind of what the expectation is of,
Provides recommendations when needed, you mean, or something like that?
yeah, yeah, exactly. And if the board finds something that they're concerned about, then we can provide, you know, that feedback to, you know, some sort of wording that more accurately, because I don't think as long as I've been on here, that we've ever presented to the town council or the board of education anything.
I've never been involved in that in
Right.
5 or so years.
Right.
Is it an implicit presentation of the board by having the minutes that mention what we looked at, what we did?
Sorry, say that again?
I don't know if just the
Or if we're
existence.
giving a recommendation to Lisa and Rick, is that considered part of this? You know, if we say, hey, you know, it'd be nice to, you should also ask to see the fees on a quarterly basis. That's a recommendation on how to stay on top of the management. I recommended that they look at some of the medical results, health results on a per member per month basis. It's too it's not an easy way to look at it when you're looking at the raw data. You should really look at it on a per member per month. It's more consistent then. And it's how the industry does it. So there's things like that we recommend, but they're more, you know, smaller ways of just, again, going back to my train of kind of keeping things down the right path. I don't know if that fits then with what's expected here.
Yeah, or we, change this and say, hey, we're providing feedback to Rick, and the expectation is that Rick provides that feedback to the town and the council and the Board of Ed.
Or just say to town officials rather than town council and BOE.
Yeah.
Right,
Because that's really our contact point of town officials.
right,
Yes.
right.
Yep.
Yeah, that I think is a good change, or at least a recommendation. And if they say no, the expectation is that we present to talk with the town, then let's start doing that.
So that would be true in 2 as well.
Yeah, exactly. Yeah.
Yep. Any other observations on number 4?
Nope.
Number 5, the board is responsible for monitoring funding levels of the town's post-employment health and welfare benefits. The board makes recommendations regarding the adequacy of that funding. Comments, thoughts?
Are we doing that?
Not often.
I mean, I think every time we look at it, we agree with Rick that it is better that we have some, but we certainly would still be better off to have more funding, right?
The funding level is somewhere around 10%, I believe, isn't it?
Yeah,
I remember, Kathy, you were discussing that some time ago.
right. I mean, it's certainly not above a quarter, right? So, and I know it's something where many towns' number is in the single digits, so we're better than many, but I don't think there's any disagreement from Rick that the more we can continue to build up that funding, the better.
So it's like having an internal recommendation.
Yes, right. I don't feel like there's been any disagreement. I know there was a time in the past, before any of our tenures, where there was someone on this committee who recommended taking the funding level down. And for a while, the town let the funding levels go lower, but since then have been building it back up. I don't even know that we're quite to the level we were at before, but I think there's a consistent opinion that we should be building that funding up.
I think it would be worthwhile to hear from Rick or whoever the appropriate person is a bit about the funding level, what the actuarial study actually says about funding requirements and where we're at, because I don't think we frequently tie those two pieces together. I
Yeah.
think, Kathy, you did that once by asking the second question.
Right.
So it's something perhaps we should hear more often.
Perhaps.
Yeah, I would agree. I mean, especially, is responsible for monitoring funding levels. So if we're responsible, yeah, unless, either change the wording that we're just kind of reviewing it, or we're actually responsible, then should. I'm not familiar with what this even means too much, so.
Well, but so I think it's worth talking about with Rick, but I think, again, it's something where if, to use an example, not trying to make it specific to this, but if we looked at a projection of future costs and all said, we should have, just making a number up, $1 million set aside to go along with that projection of future costs. And we said, and right now we have 200,000 and we're able to put in 5,000 a year, we'd all agree, okay, the funding is not adequate and we should put as much in as we can, but there's limits on how quickly you can build it up. So again, I'm totally making up the numbers, but I think the status is something like that, where the level of funding, the liability grew much, much faster than the funding levels could.
And that's the interesting other facet. How's the liability growing relative to your investment base?
Yeah. Yep. So remember, there were some changes made recently to help with that. So we should have another conversation with Rick about it. But I feel like this is something we talk about maybe at least once a year, maybe twice a year. Although since we barely met this year, maybe it's just once a year.
We're setting up a lot of interesting discussion items for January,
Yeah.
hopefully with everybody there.
Yes.
Number 6, to meet these responsibilities, the board shall report periodically to the town council and board of education on matters relating to the risk management program. An annual report of the financial results on the operation of the risk management program shall be made at the close of the fiscal year.
Writing it right now. It should be ready in another couple of weeks.
So it's something that you all prepare and we review.
That is correct. So we have to wait until the auditors are done with their financial statement audit. I have all the report prepared, but I can't really release it until they tell us that they're completely done.
How do we have any procedure for reporting to the board, to the town council and board of education?
Regarding what?
Well,
The results of operation?
the board shall report periodically to the town council and the board of ed on matters related to the risk management program. Is there such a structure really in place?
Like Kathy had said, I'm thinking that maybe when we're showing you guys the report for your review, and then the report does go to the town council, that maybe that is what they're saying. But I can certainly clarify that with.
So
Rick
this
and
would be
Jim.
a third paragraph where maybe the changing of the wording from town council and BOE to town officials might be appropriate.
Okay.
You agree, Kathy?
Or at least that there's, in this one, it sounds more like the town of review the annual report prepared by town officials.
Well, I
Because
was
the report
thinking
still
the first
goes to-
sentence, which is reporting on matters related to the risk management program.
Yeah, but it sounds, I think that the part of the confusion, like Rick oversees the risk management program for the town, right? And so
Yes.
Rick has to provide a report to the town and board on risk management. And we, as the advisory board, review that. But it's a little confusing in terms of when is it that Rick is responsible for doing something and we're advising him and his team, and when is it that he, as opposed to we as an independent board are presenting to the town council and the board of ed. I don't know, Lisa, if it ever worked that way, but it's
Not to my knowledge.
yeah, we haven't been trying to do that. So,
And our point of contact is always either Rick or someone at a level that's below the town council and the BOE. So our interface with town council and BOE has not existed since I've been on the board.
Yeah, I would agree. I think that the wording should be changed to, we review, what the town officials create rather than we create and present.
Right.
Yeah.
And last, number 7, the board shall at its regular meetings provide advice and make recommendations to the town and school system administration members on risk management issues, including but not limited to healthcare benefits and costs for employees, proposed budget and programs to manage property casualty risks.
so certainly if you take out school system administration members, that's some of what we do.
I agree with you.
Well, Rick does sit on both sides, so maybe.
Okay, so he's considered both then?
It's
Okay.
definitely
His
school
office
administration.
is actually in the BOE. So
I'm sorry. Yes, he's 50-50.
Okay. So then if it didn't have an S on it, it would work. Town and school system administration member. Is he the only one that's on both?
There are a couple employees that are 50-50, but it's very rare.
Okay.
I
The
think how,
implication of
yeah.
this, though, is that we're somewhat proactive in what we do, and I think we're more reactive.
Hmm.
I don't think we really provide, we don't make recommendations very often unless we see something that we just think is um, not in the norm, not in a reasonable range. I'm not sure if we would have the timing even to say on the property casualty side, which is where I'm familiar. I'm not sure whether we think this is a good idea for you to do A, B, or C, whatever. I don't think we really get involved in that very often. Like at this point, on the property casualty side, for workers' comp, the town retains the first 600,000 of loss for all employees except first responders, where it's 750,000. Perhaps perhaps the 750 is a better answer for everyone, depending on how much premium the town would save. I don't know the answer to that, but I'm not sure who makes that decision, who does the analysis to figure that out. It's an area where I think we could bring some value to the table if we were asked to. There are probably similar sorts of examples, Kathy, for you, Ian, for you, in your respective areas of knowledge, where you might look and say, did you think of doing this? And Kathy, I know you did that, talking about the per member costs.
Just a little bit. I mean, I think yeah, there's some opportunity there, I think, in our discussions. I know the goal of this is not for us to be looking over their shoulder and trying to redo every decision they're making.
No, I'm
Right.
not suggesting that. I agree with you.
I know you're not, but I think that's what this is trying to strike some kind of balance to, is saying, can we look at the, and review some of the major decisions. So I think what this begs a question to maybe is how then those meetings are allocated. And if you follow back with this discussion and say, okay, so what are the decision points during the year, or given what the way we're advising, where it would make the most sense? When should we have maybe a little deeper view of how are you thinking about the benefit strategy over the next bit? How are you thinking about the P&C policies over the next bit? The investment stuff we review fairly regularly because Chris has to come in and give a report.
And in that case, Ian can hear what's being said and assess whether everything looks reasonable with his knowledge and provide that expertise. And when we get to the health side, you can hear what's being said and does that make sense? And for me on the property casualty side, ditto. But do we get to a point sometimes where we say, I think we could do something better here or there?
Mhm.
Yeah, I agree in general that the wording of some of these, our job's really, or at least what we've been doing, I don't know what our job is, but we're reviewing what the town is putting out and maybe we're making recommendations. I don't even know. But I think we're certainly not doing all the, research and, finding out, running an RFP or finding out what the best way to do things is, or, so.
It would be even harder to fill the positions if we were supposed to do that.
Right, exactly. No, that would be a lot of work. So I'm
Right.
not complaining what we're doing is, but I think it just needs to be reflected that
Yes.
we're reviewing what the town is doing rather than we're making recommendations as to what the town should do.
And at least on the property casualty side, it's reviewing what the town has already done.
Right.
So
right.
we're hearing what's happened, but we have no suggestion, input, or anything into it. This is very constructive. I think we've had a lot more discussion on these issues than I've ever had on the committee before.
Well, it'd be nice to clean it up, because then we can use it over and over again if it's,
And to figure out if we can provide more assistance, guidance in a more proactive way.
yeah.
Any other discussion on board objectives?
Nope.
That is item number 9 of the agenda, which leaves us, item number 8 rather, which leaves us item number 9, which is labeled other. Is there any other business?
Well, just that I remember in one of the notes that if we didn't have a quorum tonight, we would have to have another meeting before the January meeting. Because
I believe this month. I believe it's a November issue.
Yeah, because I think we have to have a quorum approved, a calendar for next year, and the piece we just did, we also have to review what our goals are. So I don't know that we can pick. I know there's usually some constraints from the town in terms of when we can have the meetings, but if we're talking about before the end of November, it would be helpful to get that done soon. I don't know if it would help for the three of us to give any guidelines on the Mondays in November, if we're going to stay with a Monday.
Lisa and John, is it possible to have the vote to approve the calendar done just via email? Send out the item, the question, the calendar, and just say, do you vote yay or nay?
That I am not sure about. We can touch base with Rick on that in the next day or two to find out if that's allowable under. I think that may be a town charter thing that we'd have to look at to make sure that we're not in violation, but it's certainly something we can look into.
But the thing is, in improving it, so like if we just, I don't want to belabor the points we were just making, but if you look at the calendar, January 10th, quarterly health benefits status. Maybe some of this is just wording, updated insurance schedule, investment results. So a lot of these are what the results have been. If our best guidance would really be on what's the proposed approach to the point you've been making, Jeff, about, well, when do we talk about what you're thinking about for your benefit structure for P&C?
When do we get proactive rather than reactive?
So can we make this a little bit more? I think the investment result package is a little bit of both, or gives the opportunity for both if we wanted to say, no, we don't agree with the way you're tilting it, right, Ian? I mean, it feels like that conversation leaves room for a forward-looking comment, not just whether you like the results. Do you agree?
As far as us telling them that they could be doing it differently,
Yes.
whether fiducian can be doing it differently. Because fiducian is really running the whole program,
Right.
right?
So there's an opportunity to comment to fiducian. I guess the way you asked that, there's maybe some need for discussing without fiducian then as well. So I don't know if that's where you were going.
Yeah. Rephrase your question again. What's the question?
Well, what I was suggesting I was trying to go back to Jeff's point about, and the conversation we just had on the objectives. If we make the objectives more clear that we're trying to use our expertise to provide advice to the town officials and the risk management team, that we would spend some of the time in our meetings looking forward. I don't know, Jeff, I don't want to put words in your mouth, but I think this is what you were trying to get at. And I'm just saying that rather than just approve the dates, there's also an element to what we review on those dates and whether that would need to be changed to align with your request.
As an example, on the property casualty side, if they were to say, here's our choices as to what we could do for the upcoming policy year, we can take a $1 million net retention for this cost, or $1.5 million at that cost, or $2 million at another cost. Here's our savings. Perhaps that, perhaps we can help them making a decision where I'm not sure who helps them make a decision on what the best course of action is.
Probably
Well,
whatever.
investment
Probably have
side.
similar things you could come up with on the health side and the investment side.
So on the investment side, the way I see it is the town has hired, not our board, but the town has hired Fiducient to make investment decisions for the different plans, which they do, and they get paid for it. And we review it to see if it's reasonable, are they doing a good job? But I don't see our job here as being, hey, Fiducient, this is how you should do it. You should be,
Right. It's
managing
more, hey,
efforts
Fiducient,
and what
you're underperforming too long.
What's that, Joe?
It would be more like, hey, Fiducient, you're underperforming the benchmarks for too long a period.
Exactly, right. I could sit here and go, hey, Fiducient, I don't agree with what you're doing here. Why are you doing this? There's a better way to do this. But they're doing it, and then we're just kind of reviewing it, and we can provide feedback, and we can kind of make sure that, yeah. And that's on the investment side, because I don't really understand the other sides enough to have an opinion on it. But the investment side, I really see us as really just reviewing what the company that we've hired to do
Right.
is doing.
Yeah, my guess was on the investment side, it comes down to, are they underperforming the market for an extended period of time? Or are they too expensive? And other than that, it's probably fine.
Right, and right, and they're running it, and they're right, exactly. And I can kind of see what they've been doing, and that what they've been doing makes sense, and they're doing a reasonably good job, I would say.
So I wasn't trying to reopen the whole discussion as much as saying that it might be a little bit harder to just vote by email. It seems like we need a little bit of a conversation with Rick and Lisa, who might say, well, remember, we do bring this to you in this meeting. And it's also hard to remember when for the last year, we've had a lot of trouble getting a quorum and getting the meetings to happen. So I think it's something that needs a little bit of discussion with them, if possible, on the objectives and the meetings, just to line the next year up. If we had to, we could probably try to do it by email if we're allowed, but would it help, Lisa, and if we just even said whether any of these Mondays work? For me anyway, I could find a way to making any of these Mondays, the 15th, 22nd, or 29th work, if those could work for the town. Rick and Lisa, whoever, you guys that are on it with us. Lisa squared.
Lisa I don't think she'll be back at all in November.
She won't be back until
So,
December.
but John, you're representing Lisa on that
Yep.
stuff, right?
Yep.
So
I
but
can
it-
certainly, if you guys want to throw out some dates, I can certainly see when Rick is available.
I just remember in the past when we tried to do a different day, there was some issue with the calendaring from the town. So we're
Okay.
kind of stuck on Mondays, I thought.
I
And if-
believe that is correct.
Okay, and if so, I can make any of the next three work. And I would propose that we just try to jump right into this part of the discussion about the tinkering with the objectives, and then making sure we agree that the calendar, the description of each of the meetings lines up with that, any kind of adjustment to the objectives.
Okay.
Perhaps we can review some of that ahead by email so we can keep the meeting short, but
Yeah, I'm fine with that. And I think I can probably be available at any time. I don't expect it to be a very long meeting.
Yeah, I'm fine with that too. The only thing for me, November 22nd, that Monday, I'll be on vacation, but other than that, I can do another Monday.
okay, so either the 15th or the 29th would work then for the three of us.
Yeah, I may be on vacation, but it doesn't matter for an hour.
Okay,
This
I don't know if I'll
isn't,
go up.
Yeah, worst case, I could call in.
Okay,
So let us have a discussion with Rick tomorrow, and then we can get back to you on all of the
Okay.
number of things you guys brought up.
great.
Okay?
Tell Rick we're sorry. Tell Rick we're sorry not only for how he had to spend his night, but then we gave him a bunch of to-dos as well.
Lisa, a couple other things. If you ask or whoever's going to ask Fiducient to provide the costs and the expenses on a
Yep.
quarterly basis, something called a revenue share if they'll know what that means, if they can
Okay.
include any revenue share that they might be getting.
Okay,
And this might be in the contract with them. But do we know what their fiduciary status is of their investment advice? Are they a full investment fiduciary? If we don't know, let's ask them and have them give it to us in writing what their status is.
okay,
But if it might be in the contract, it might just say right in the contract that they,
all right, I'll check that.
that's a big thing in the investment industry now. We have people who are, don't consider themselves fiduciaries, and that means they don't have to have the best interest of the town as their primary objective. And if they are considered a fiduciary, then they're legally obligated to have the best interest of the town at heart.
Okay.
So we
Is
just
that
wanted to-
regulated by the SEC?
What's that?
Is that regulated by the SEC? Someone's regulating it, I suspect.
It depends. If it's a retirement thing, it's regulated under FINRA, under ERISA, which is the SEC, it's a DOL. But some of these other plans may or may not be. And even then, it's not really regulated. It's just a matter of you either hire someone who is or isn't, right? And if you hire somebody who isn't, then they don't have to do it. So you just want to make sure that we've hired somebody who does consider themselves to be a fiduciary legally.
One other question I'd have for Kathy and Ian, what's the sentiment on meeting in person as opposed to WebExing?
Yeah, go ahead, Kathy.
I'm more relaxed about the COVID aspects of it now, but I do find the Zoom part to be more flexible, cuts down on the travel and everything else. So, but I'm retired now, so I don't spend my whole day on Zoom meetings. So I have a slight leaning towards Zoom, but it's not a health requirement for me at this point.
Yeah, I'm in a similar position. I don't mind doing an in-person meeting. I would love to meet all of you in person because I've never actually met any of you in person. So that would be nice. But I do.
We're really bots.
What's that?
We're really bots.
Yeah, I know, right? Artificial intelligence. Soon enough, we'll all be fake. But yeah, I do like the convenience of just being, not having to drive to town hall. Not that it's, that far, but so I'd love to, maybe we can do 1 or 2 per year in person and 1 or 2 over Zoom or something like that. So we have some contact, but either way, I'm flexible.
It does make it a little bit easier because, like you said, if you're on vacation, calling in for a meeting, especially if we said we're going to have 4 meetings, these are when they are, we need you to commit that you're going to go to these 4 meetings. Then it's a little easier if you can have a Zoom option that you can go to a quiet room and participate in the meeting. So that's the only other thing I would add.
Yeah.
2 board meetings in the last week. One was in person and one was Zooming. And I just like the in-person more. And I'm an actuary, most actuary, the whole introverted, extroverted thing, I don't know.
Yeah.
Yeah, the extroverts look at your shoes when they're talking, that one.
Every actuary knows that one.
I was the only other person on the call allowed to say that, so I had to throw it out for you.
So that's to be discussed in the future. That's not urgent. In my case, my office is just right by the corner of North Main and Farmington Avenue. So for me to get to town hall is a piece of cake.
Right. Yeah. For me, it's not that hard either. I don't mind. And I work from home, so I like getting out every once in a while. But maybe we can keep the Zoom option regardless, even if we all meet, like Kathy was saying, if you're on vacation and, maybe 5 or 6 people meet in person, but the other 1 or 2 can still vote and participate online.
Let's hope we get to that many people.
I hope so. Yeah, we should.
Any other items to discuss?
Nope.
Or is it cocktail hour?
It's cocktail hour.
Well, I have to leave the building before cocktail hour.
Yeah, Right.
I guess we still could have a motion to adjourn.
So moved.
There's only one person a second.
Second,
All in favor?
Thank you.
all of
Well,
us.
thank you. It was great seeing. This is absolutely a terrific discussion, I think. We really dove into a lot of areas that we really haven't dived into in the past and really thought about what our mission is. And I thought that was terrific. So thank you both.
Yeah, no, that's great. And I think, we should have, everything aligned with what we actually do. So the expectations and what we do are the same. I think what we're doing is great, but let's make sure that those are the expectations and that they're not expecting us to make recommendations to the town council and we've never met the town council,
Correct.
Right.
Sounds good. Well, thank you all.
Thanks. See ya.
Have a good
We'll see you
night.
soon.
All
Bye-bye.
right, good night, everyone.
Good
Bye.
night.